just being slow and lazy today. Boy, it always seems dark in here. I got a light. Hang on, let me go to the other side of the office and get a light. Does that help? Probably not. It always looks so dark in here. Maybe my screens throw a lot of light off, huh? That's a little better, I suppose. I don't know. The sun's going to come up soon. Anyways, yeah, I'm feeling all soft and squishy today, so sorry about that. But you know, another day, right? Another day, another opportunity to make some money. Life isn't boring. There's things to do, things to see, right? Oh, I gotta turn this mic off or mute that. So, anyways, let's just go through it all, huh? Might as well just go. So let's go. No, you go. You go. My shoulders are killing me. Oh. Sitting here too long, seriously. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, drink good coffee, and never risk money you cannot afford to lose. So anyways, hey, good morning, guys. You must do some exercise. Jeez. I'm getting close. I keep thinking, you know what? I should probably go exercise. But it's the thought that counts, right? Anyways, hey, good morning. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. We're an ECN. Yep. We're quick, we're nimble, we're affordable, we're reliable. That's everything you want. You don't want drama, mama. You want to click a button, you want the trade executed. Enough said. We can do that for you. But look, we're actually investing into you up front. We want you to be a success. That's why I'm doing these seminars every single day. I'm trying to teach you, you know, methodology, and I'm trying to show you a way to stay conservative, stay disciplined, stay focused, and on top of that, still be profitable. And I think if you hang with me long enough, I'll show you that being conservative will actually make you more money on the long run. It's a really interesting thing. Now, why would we do that? Because we want you to build skills that can last the test of time and be profitable, not just for 3 months in a row and then blow up your trade account, but maybe 3 decades in a row and then retire happy. And so we do this up front. I really do seriously want you to succeed. And then once you do have skills developed and confidence building up, and maybe you've saved a little bankroll to start trading, maybe it's not this year, maybe it's next year. I'm okay with that. I'm a patient person. But one day you will open a live account with your patience, your skills, your discipline, and your money, and you're off to the races, and we'll be a business partner with you. We'll execute your trades as your prime broker. Sound good enough? Yeah. I mean, it's really nice, isn't it? Yeah. Do you ever hear things from me like, go, 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 trade, 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 increase your volume, trade more, trade more. But isn't that what you usually get from your broker? Come on, dude. Increase your leverage. Come on, get in there. You got to trade, trade, trade. Whoa, look, I've been in 5 trades already. How many? So, anyways, sorry, I got programmers pinging me and doing things. All right, so quick update. What's going on in the world? PMI in China. Wow. 48? Are you kidding me? 48. A little update on how this works. If your economy is expanding, you'll have a number over 50. If your economy is contracting, you will have a number below 50. Contracting 48. 11 months in a row. And we're at a 5-month low. Huh. Well, that doesn't seem good, does it? Nope. Okay. PMI 49, right? So both measures here, very bad, very bad. 4-year low. Okay. PMI services still expanding, but 4-year low. Now remember, the theory is China's trying to become a service economy, right? That's the theory, anyways. So someone might say, well, look, they're moving away from manufacturing and into services. Oh, I don't buy that at all. But anyways, the numbers are low, but at least services are above 50. Japanese capital spending, whatever. Japan, Japanese unemployment, 3.2. Wow, huh? 3.2. Holy smokes. Okay. An Australian current account, negative 21 billion. Fine. Not huge numbers, but, favorable to the Aussie. Okay, European session, oil prices start to move higher in the European session. A little bit of risk on. What does that mean for the yens? What does Uncle Wayne teach you? Risk on, yen down, carry up. Bada bing, bada boom. Right? Very nice. So that's good. That's the kind of stuff we want to hear. European PMI. Okay. All right. Mixed. But as long as Germany and the Eurozone are not horrific, we're fine with that, right? Look at that. UK PMI manufacturing, 50.8. Not good at all. But remember, China was 48. So 50.8, let's just call it 51. 36 months of expansion. But that's the lowest we've seen in a while, a long while, since 2013. Eurozone unemployment. I thought I'd put this here. Yeah, only. It's terrible, isn't it? It's terrible. Only 10.3, a 4-year low. Good job, Europe. Holy smokes. When you put that in context, it's redonkulous. Right? What does that mean in Portugal? What's the unemployment rate in Portugal right now? They're like, well, they were going to calculate it, but the guy got laid off. The government laid him off. Oh, it's only funny because it's so unbelievably horrific. I have a lot of good friends in Portugal. I want to go visit. I want to sail the Portuguese winds. But wow. Oh, 11.8, that's not so bad. But they were saying like so many people have left the country to seek work in other places. So, if dad goes somewhere and gets a job, he takes the wife and kids with him. And so there's no children in any of the elementary schools. And the only people hanging around in Portugal are senior citizens. So they're starting to use elementary schools in Portugal as old folks' homes. Holy what? There's a bad sign, huh? You're talking about an aging population in Japan. Wow. So I'd love to go to Portugal and hang with you guys. Seriously, I'm a big fan of warm, beauty, wine. Oh, that sums it up basically. Yeah, that's pretty much that's pretty much it, right? Yeah, the food and the sea and all that kind of stuff. Yeah. Madeira? Oh yeah. Yeah. Anyways, oh wow, we got to go. Oh, and oh, I want to point something out. Japan for the first time sells negative yield JGBs on the 10-year. A 10-year basically T-note, right? A JGB. 10-year Japanese treasury, Japanese government bond. Negative yield. So I was thinking about this. How does that actually work? So a bond has a maturity date in which you get money back, but you're also supposed to receive a yield, right? Right? You're supposed to receive coupon payments. And there was actually a time where there was a little coupon on the bottom of your bond. And you'd rip it off and you'd actually go to the company and say, to the little window, here's my bond coupon. And they're like, okay, here's your $4.27. And it was good, right? So how do you suddenly, with a negative JGB, do you actually walk to the Bank of Japan and give them money? Here you go, here's $4.27. And they're like, thank you. I mean, it's odd. No, but that's not how it works. So it's an interesting thing. Basically, your coupons are zero, so you're not going to get a coupon payment. But like in a 30-day treasury, like at the Fed, right, like at the Fed funds rate, they don't pay coupon payments either, because instead of getting money quarterly, well, it's already matured in 30 days, right? So it's a discount bond. So what they're doing, it's really interesting. They've had to take a traditional coupon bond. It's still a coupon bond because you can't just change a treasury because it would be a different asset class. So they say, okay, it's a hybrid. Here's your bond, loan the government $1,000. Your coupon payment every few months is going to be zero. And at the end of 10 years, we'll give you $999.27 back. Isn't it interesting? So now it's kind of a coupon bond, but it doesn't actually pay coupon payments, but it's structured as a coupon. But it's also a discount bond. I mean, wow, we've never done this before in the history of the world. Isn't it weird? Well, James, it's a long-term CD that pays you less money. So you put $1,000 in, you got $999.27 back. And no coupon payments. Okay? So, wow, but this must have been a problem for somebody. They're like, all right, Bank of Japan announced negative interest rates, but how the hell are we actually going to do it? Right? Well, James says, what is the point? Well, people bought them. What is the point? I don't know. Okay. So I think that's pretty interesting, right? So that's what I dug up for you because, right, Wayne never sleeps. I do this for you because you're my sweet baby. All right, coming up. Kiwi's going to move. Kiwi's going to move. Kiwi's going to move in 1 hour and 10 minutes. Boom, Kiwi's going to move. Are you going to be there? There's a huge tracts of land. There's a huge proportion of the population that have no idea that this is coming up. They don't see it on their calendar. It's not reported most places. Most people don't even understand the correlation to, nothing. Most people don't know anything about this. But I've taught you over the years how to do this, and I even did a video on the YouTube channel. Just type in Forex, Forex, what's it, pigs and cows? No, cows and uh, pips and cows, cows and something. Type in Forex cows, and I'm sure you're going to find the video. But I teach you why and how. But yes, it starts right here with the Fonterra Global Dairy Auction. Interesting, huh? So Google it. Canada manufacturing PMI 49.3. Okay, wouldn't it be nice to get something, do you do it this way? Greater than 50? Pac-Man eats the bigger, yeah, something like that. Cows and kiwis. Thank you, Damien. Cows and kiwis. What a clever boy I am. You could probably find it on Forex.Today as well. But thank you, guys. So anyways, wouldn't that be nice? But why would that happen? Right? US PMI, we get our chance. We're looking at 51. Right? I wouldn't be shocked if that was a little better. But the idea is maybe the strong dollar is bad for exports. What people don't typically get is it's not the strong dollar per se, it's the weak everything else. Okay? Look, if the UK, right, if the Great British Pound was ripper strong, then that would offset the ripper strong US dollar, right? It's just that the pound sucks and the euro sucks, pardon my French, and everything else seems to suck. So, that's the problem, I think. And here's the thing, and it's funny, and we've talked about it so much, so I won't go into a diatribe, but we're all waiting for Europe. Right? That's it. It's the only problem in the world right now. And I swear to you, the ECB is not going to do anything about it for a very long time. But we're all waiting for Europe. I'm telling you, bring that economy online, right? So let's call it, I don't know, let's just call it the number 2 economy. As far as actually consuming and buying and doing things, right? Where if we could belittle China a little bit, I don't want to do it too much because I'm going there soon, so I don't want to be like thrown in jail as capitalist big dog. But let's say there's still a manufacturing economy for the rest of the world. So they're just sitting around waiting for orders from Europe. They're getting stuff from us, but we're waiting for Europe. So Europe, let's go. Like, honestly, I think we should have had at that G20 meeting, we should have invited the central bankers too. We should have all sat down and said, you know what? We're just going to take over Europe. We're just going to fix it, do whatever it takes. This huge coordinated effort, 100 billion trillion euros or something. I don't know. And we just fix it. And like, Greece, you want out? Get the hell out. Boom. Fixed. Just do whatever it needs to do, right? Clean up house, clean it all up, clean it all up, clean it all up, save Europe. Then that saves China. China saves Canada, New Zealand, Australia, and that starts to do things for other things. And then you get this upward spiral, and demand for energy would go up, and Russia and Venezuela are saved, and don't forget about Kazakhstan, and, woo, right? The Middle East is saved. Everybody's saved, man. Come on, Europe. Right? Do it for the sheikhs of Abu Dhabi. They need your help. They can't buy new yachts when oil is at $35 a barrel. That's unacceptable. Right? Help us shake out, brother. All right, you ready to go, yo? I need the happy music though. I'm sorry. Let me search for it. I'm just slow today. Soft and squishy today, I guess. I don't know. Tell you what it is. I went through my my reading assignments for the week for my class at Harvard. It's read 2,000 pages. I am not joking. My weekly reading assignment is read 2,000 pages and then write a paper. Like, is she stupid or what? What? I mean, it's stupid. Like, I'm doing more in my life than that. I mean, I have a job, and what if I had another class? I mean, talk about the crowding out effect, huh? Well, what? Ridiculous. Maybe that's where I am. I've lost my brain. Just too much reading. Yeah. Well, how do you find the time, right? Right. I mean, it's a basic question, right? How does one read 2,000 pages? My wife can, but she's a genius. I'm just a country bumpkin from Saskatchewan. That's a lot of reading for a boy. 2,000. I know. I'm not joking. And by the way, you're like, wow, I have to buy these other books besides my textbooks? And they're like, yeah, it's $400 worth of books. I'm like, are you for the week? Holy crimoly. No wonder poor people don't go. Because it's so stupid. There's no common sense. I've hired about 5 people from Harvard over the years, and I've fired every one of them because they have no common sense. So I don't know if I fit in. So anyways, let's get going. What do you see here? Maybe a double bottom, eh? What do you think? Maybe a double bottom forming on yesterday's low? This is just a 5-minute chart. I know. Don't make a big stink, right? But it's something, right? So this could be some sort of consolidation, and then maybe up to here, it's going to hit this. It will respect that. Oh, come on, drawing tool. Right? It will respect that. That's going to be resistance. But then what? Then this resistance may become support. I'm going to watch for that. And wouldn't it be nice if we get the second move down and up, so to speak? Man, every developer I have working for me is pinging me all the same. Now what? All right, sorry. Got a team, man. All right, so I'm not even looking at that time frame. Well, good. All right, let's go to the daily then. All right. What do you see? La 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 la. Oh, dang, this drawing tool. Come on. All right. La 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 la. Maybe, baby. How about something like that? Huh. Whale oil B. Right? Maybe? Well, then it's got to go up, don't you think? Drop into the 60, and we're already there. Oh, snap. Did that just happen? That almost looks intelligent. I wonder if we can get that to head up above this, like I already showed you. Let me do it this way. Kind of got to get through this congestion and rocket through that. Rocket man, right? Yeah, well, okay, Miles brings up a good point, and I would agree with that. I'm always going to think down on this one. Okay? So why don't I talk about it now? Because we're at support. So here, let's break everything down to the essence of trading. If you're a bear, you sell at resistance. Done. So if you're pre-London and Euro USD is at resistance, look for signs of rollover. Sell it. Well, I don't have that now. So that would not be valid. But if you were here, right? Tokyo, London, okay, if you didn't short in here, then you're just not a bear or you don't know how to trade, right? Do I talk about it here? No. Now, all right, so do we want to do this now at New York this way? You can. I don't like it as much because we're in the middle of the range. Okay? I'd rather you be a lot closer to 109. But yeah, the time of day is correct. The hourly doesn't look set for it. So you're going to have to play it here on the 15, okay? And what you're going to do is kind of like this. It's less ideal to say the least, okay? Okay. The people that bought it at 50, and there's clearly people buying it around 50 because you can see a buy order. Somebody would clearly buy it around 50. What are they thinking? They're thinking at least 109, right? Would you buy it around 150, 160 and say, well, I'm going to jack this all the way up to 180? Probably not, right? Peter, Google. I think that one, the one I'm using, is called Four Sessions. You can just Google it. The downside to it is you have to monkey around with it to get it to show you the right hours. I mean, I must have played with it for 40, well, no, half an hour to tweak it to get it to show me the right hour so that New York opens, now. Okay, for example. So that's the downside to it. But yeah. And you can turn the pip stuff off, and you can turn that off, and you can change the colors. Yeah, 4 sessions, number 4 sessions, but it's not mine. Okay, but once you get it, save the template. You're golden, right? Did everybody watch the video on how to that I just did the other day, how to save templates and stuff? Okay, by the way, we have an expert on Swiss franc posting analysis on Forex.Today about the Swiss franc. So he's got a Euro Swissies forecast for us. Very nice. Nuno's got his Euro stuff going. And it's on page 2. I'll go over there. And we have another new expert posting analysis about the US dollar. Okay. Nice stuff, right? You're welcome. But it's this one here. It has the one on where I cover things like differences between templates and profiles and all that kind of stuff. And some other tips and tips and tricks for MT4? Are you guys leaving comments? These are real people, guys, spending time writing down their thoughts, watching the market for you. Would you please leave them comments? You know, you could say things like, hey, thanks, good analysis, nice charts, whatever. But, right? But, you know what would be cool? It's just a thought, not heckling, but a thought of whether you agree or disagree. Right? Because I'll tell you, statistically, every time someone's long, someone else wants to sell it. So, you know, both may be right. The time frames may be different. So anyways, please leave a comment, you know, come on, share some stuff, right? So, all right, so there's that. So that's where we're starting on that. Oh, and let me clean this up. Is there anything I need to comment on here? Not really. Okay, let's do some pig dog. Let's trade the pig dog again. Where's my pig dog? Way down here. So a little bit of a bouncy bounce on the pig. Are you ready to see why? This bounce on the pig, two things I want to point out. Let me get rid of volume. Okay. This is a cluster of two pivots, monthly and weekly pivots. Okay. Monthly M2, weekly M2. What does M2 project if this happens to be the bottom? Let's just say on the very first day of the month, this is the bottom. Do we know if that's going to be the bottom? No. Monthly M4, which is up here. So it says buy at 138, take profit at 147. 900 pip estimated move for March. Should we watch to see signs of that happening? Yeah, Mark. Yeah, no, it's really the 140 level. Yeah, but okay. Ken says it doubt very much. Okay, that's fine. I'm not. We're only doing technical analysis. I have no opinion. It's just technical analysis, right? If that holds, then that's the target. So if it does this, which doesn't take much effort, then that's dead, right, Kenny? Yep. Okay, cool. So I'm not debating that whatsoever. But as Mark points out, this is a huge multi-decade low. Okay. Now, what did we talk about 6 months ago? This is me adding support. Oh no, I sneezed. No. You know when you have kids and they go to school, oh, they always bring diseases home. Ugh. Anyways, what did we say 6 months ago? We had like a 34, 35, 36 kind of area, right? We're getting close to that. I mean, right? And we're talking about a multi-generational low here. So, you know, a few hundred pips is nothing, right? But anyways, but also we're going to start to look for better than expected data for the UK. And because of that, a little farther down the road, we're going to expect better than expected IMF, right? IMF data, or not data, outlook. And then we could look back and say, holy smack, this thing's up 500 or 600 pips, right? So this begs the question, new day of the month, and we're at support. Does it go up? I don't know. Should we be ready? Should we be thoughtful about this? Should we be prepared? Should you take the shot? I don't know. I don't want to risk 35 pips. I mean, at least you got to be ready. And it's one of these things that you have to be studying the right thing and even looking for the right thing when you study, right? So do you bring your magnifying glass out? Maybe you're not ready for the microscope, but are you at least paying attention with your magnifying glass? You're like, oh, let's see here. Oh, that pound is looking pretty interesting. Okay? So I'm not saying it's going to go up. We're still in the if-then statement process. But holy smokes, up for 2 days in a row. Huh. How many days in a row are you going to let it go up? All right. Then I say to myself, what happened the last time we were here? Okay. The last time we were here, we looked at the bottom, which you can see I have the plan, traded the retracement, and had a target of this. And, right, there's our target. How did we do? Well, I think if you smooth this out, sure, it spiked 1 day above, but only half the day above, then a doji, and then straight down below, about the same distance as it was above, came back and then consolidated. So I think if you averaged it out, that projection was exact. So, and then it collapsed, right? But it collapsed because of fundamentals. It doesn't mean this will go up, collapse. But if you want to play it, if you're still a bear, you're going to look for this kind of stuff, okay? But even in a failed move, it went from 141 to 146. So even a failed, pathetic move moved 500 pips. Huh? And that's the one that failed. This is where you scratch your goatee and you go, yes, very interesting. Yes. Huh? So, I don't know. Pay attention to this. Pay attention to this. It's oversold at support. Maybe it does something interesting. So, I don't know. What do you think? Should we ignore it? Yeah, forget it. All right. Very quiet today, though, right? Very quiet day today. I think, have you found good scalping? Because I swing overnight, right? So did you find any good scalping? Were you able to like grab a trade that made you lots of pips in But did I not mention that in the PowerPoint? I thought I did. Oh, I typed it, but I didn't say anything. Yeah, today is Super Tuesday. And what that means is Americans right now are choosing candidates that will then go to their party's conventions where the party will nominate some, a representative of the party to run for president of the United States. So they're still selecting who they want to represent the Democratic Party or the Republican Party, for example. And so they have elections. Now, if you go to the elections and there's a Super Tuesday is 12 different states all in the same day are having their election, but it's not for president of the United States. It's for who your favorite of your party is. So in Georgia, Georgia is heavily Republican. Majority of people here are Republicans. But if you're a Democrat, you still have to vote, and you get to the voting station, and you either vote for Bernie Sanders or Hillary Clinton. But what if you change your party and you're like, oh, but I like Donald Trump? You can't vote for Donald Trump. You're a registered Democrat. All right. So that's kind of where we are now. So it's not a presidential election, but it's a big day. And, if Donald Trump kills it today, it's going to be interesting what happens. Okay. So, anyways, I'm not saying what'll happen to the dollar, but yeah, that is it is a big deal. So it's a big deal today. So, whoa. Oh, let's do some commodities. In fact, let's just quickly. I'm going to pull up the stock indice one, but I'm not going to really talk much about anything but gold and oil. Pound Aussie. Okay. Stock market up in Germany. Stock market up in the UK. Stock market up in Euro. And this is yesterday's gap low, stock market up in Japan. So we already talked about that. Like this is an easy risk on day, right? So I'm assuming you sold the yen. Really, that's the only thing that it makes me think of right away is sell the yen. So I don't know what else you would have done, but I hope you're starting to watch these things. Is anyone finding that they spend more time looking at the intermarket system than they've ever done before you know, watching the DAX? For example, are you watching bond rates? Are you watching gold and oil? Yeah? Do you ever bring up the Nikkei while barbecuing with your buddies on the weekends? Yeah. So, anyways, what I want to get to here is gold. All right. So, I've been a big bear on gold, right? Why am I not as bearish before, or as before, or maybe not bearish at all, or I'm not really bullish, but what's changed? How about that? What's changed? What's a more compelling argument for gold? Because I've sold it for years and years and years, right? I mean, Well, the $1,000 level is a supportive level, or let's say defensive level, and that's what we talked about, a year ago or even 2 years ago. Right? I said somewhere between 1,100 and 1,000, and I said the only reason it'd be 1,100 is because they're preparing to defend 1,000. Turns out it came down to 1,050. Right? Perfect, right? But okay, that's fine. But that doesn't say rally. That just says stop. Okay, that's the floor. It's the negative interest rates that have been introduced in the world in Europe and Japan and Switzerland. Okay, that's never been done before, ever. So, anyways, negative interest rates, yeah. And was it the December ECB meeting that Europe announced negative interest rates? Was it? Well, that looks pretty interesting, huh? Right? Then this would be the December ECB meeting, somewhere in here. Very nice. Okay, so that's gold. People seem to continue to buy it, right? Why buy a negative, why buy a 10-year Japanese government bond and face inflation risk and then at the same time pay for the privilege of doing it, being guaranteed to lose a little bit of money? Now, of course, it's not a lot of money. Yeah, why gold? That's the ancient question, though, isn't it? And I guess for me, maybe I'm just not old enough. I'm 40 to 40 something, 42. I don't know how old I am, but I don't feel old enough to be able to answer that question because as long as I've been trading, it hasn't traded as the asset class that they sell you in textbooks. When gold skyrocketed, I have some great history with gold. I told people to fill their closets full of gold, and I think it was at 350. And there was a time when I'm on the trade show floor. I was in a booth of a broker. This is back when I was independent. It was IBFX, right? Interbank FX. And I'm in their booth. In the center, they spent a huge amount of money on this booth. I mean, they must have dumped 200 grand on the conference and stuff. And they had this huge booth, and they wanted people to come into the booth. So they had me come in, and we set it up as a speaking area where people could watch me do presentations. And I'm walking around the booth with a bullhorn. Roger that. Right? Bullhorn. And I have this big, screen behind me with gold going from 350 to 450 to 550 to 650 to 750. I'm like, gold 1,000 question mark. It seemed ridiculous at the time. And I'm begging for people to buy gold. What an idiot. But it happened. Right? And then it went to 2,000. At some point, though, it wasn't fundamental, was it? At some point, it becomes hysteria. And then the whole thing has to come crashing down. Look, I don't think gold's even worth 1,000. So why isn't it 650? Emotions. So now, why hold it instead of negative interest rates? Well, I suppose the theory is you're not paying the negative yield, and maybe if inflation does kick in 5 years from now, or 10 years from now, or 20 years from now, and you're holding physical gold, then that goes up. And if physical gold goes up, the underlying asset goes up, then the future contract should go up too. And so maybe some people play that, but I don't know. I'm not that old, and I don't have that kind of money where I have a ton of physical gold in a vault. But I've met people that do it, right? I've actually met people that have a ton of gold. I thought he was joking. He's no. Actually, I have a ton. Um, so yeah, it's just it's traditionally there for an inflation hedge, but that's not what we're facing right now. It's a fear thing, and it's a physical asset, but the futures price is going up, and that's where a lot of people are playing it. So I don't know. It seems to me I would do something else with my money, but gold is not a bad play. Okay. Okay. So yeah, that's it. So just a few seconds here.
Month-on-month expected 0.1%, year-over-year expected 0.0%, and with the December data, we'll get Q4 expected at 0.0%. Canada GDP in just a few seconds. Waiting the Canada data. Canada GDP 0.2% month-to-month, 1/10 higher than expected. Year-over-year at 0.5%. Is 5/10 higher than expected. With back month revised up 3/10 to 0.5%. Quarterly GDP for Q4 at 0.8% higher than the 0% expectation, with the prior quarter revised up to 2.4% from 2.3%.
All right, there we go. Not a negative number. Year over year, it was actually pretty good. I got to adjust here. We're at yesterday's 618. If you're a bear, that's your sell zone right there. That's yesterday's 618. To say it differently, it's 618 Fibonacci retracement into yesterday's trading zone. If you were a bear, you would sell that. But that's very, very good news for KittyCAD. Very, very good news. In particular, it was the year over year. They were expecting 0, and they got 0.5%. That's pretty good. Now remember, we're starting to get surprisingly good GDP out of several countries now, right? Countries that had horrible weather last year, and this year we didn't have, or let's say the more used, last year we didn't have horrible weather. The year before we had horrible weather. The horrible weather created a negative number in the calculations of GDP year over year. Then that horrible number just got dropped off and replaced with an average number. And so this is like the second or third country now that, we got better than expected. I mean, when you're talking about GDP, being off 0.5% is huge, right? And we're starting to see some of this come in the preliminary numbers, which is nice because we did talk about it quite literally a year ago. Now, BG is talking about gold. Gold is gold. It's a physical asset. Yes. Value of paper currency is always relative. Yes. But when you're facing, let's say, well, are you going to hold the bond to maturity? I guess is going to be a question. So let's say you hold it for 10 years. You're going to get your money back. Let's just say you're going to get all your money back because it's like it's within, it's a very, very small loss. You're going to get 99.75% of your money back, even higher than that, right? So you're basically getting your money back. The risk you're facing is inflationary risk. And how much inflation is Japan going to create over the course of the next 10 years? Well, their goal is 2%, right? So you're facing 2% risk, and then there's going to be exchange rate risk as well. Kind of hard to calculate, right? All that kind of stuff. Gold, I suppose when you look at all that kind of stuff, you decide it's a better risk. But what I'm saying is it's not so easy one way or the other. But I get at least all you're expecting is gold to collapse. Gold will either drop to 500 in the next 10 years or it'll go back to 2000. And you're thinking, well, there's no way it can go back to 500, right? So stable, maybe. And in 10 years, if your outlook is 10 years, in 10 years, I believe the dollar is going to be weak. Okay? I think the next 3 or 4 years, the dollar will continue to be strong. Maybe only 2 or 3 years, right? So in 10 years, it'll weaken again. So maybe that's good for you, maybe that's bad. But I'm just saying they're not very easy calculations, one way or the other, and that gold may not be that much special. Okay, but in 10 years, if the dollar is weakened, then your gold will be worth more. So there you go. Okay, there was just a little micro pullback in there. The only one that occurred happened in the almost the first minute, right? It's a nice number, guys. It's a really nice number. Okay, let's go out to a 5-minute chart. And if you bought it here, you'd be a fool. So you need to develop a trade plan. If you're a bull, you have 2 choices here. Wait for a break or retracement and then buy off support. Okay. Choice number 2, if you're a bull, is to let it break, let it pull back, and then buy it. Yeah? Okay. And if you're a bear, you need to be you need to be preparing, right? If you're a bear, you need to identify levels of resistance. So there are two places that I see, the one where we're at, and the next one's basically up here at the psych level. So on a 1 minute chart, what you want to look for is, this kind of stuff. So let's go to the 60-second chart. Okay. And so a bear would probably sell. Okay. Any thoughts? Any questions? Well, Ryan says no good reason to be a bear. Well, you'd be a scalper, Ryan. It's simply a counter trend trade. You're not making a statement, right? You're just, that's it. You're selling it at resistance, right? That's all. So without further ado, wait, Artem, what GDP number you expect from? Well, I don't know what number they're going to get, but better than expected. But see, I don't think Australia faced the same weather issue. They're in the southern hemisphere, so they're not going to have the same issues. So I'm going to say it's going to be not a good number. They're not going to beat expectations. Okay. Don't forget. Yeah, I only got a few minutes though, Ryan, but yeah. So without further ado, I'll see you tomorrow. Will you be here? Yeah? Well, thank you. I mean, honestly, I like you being on my team. This is, I like it. I like what we do together. You're good people. And I appreciate your effort too. And I implore some of you to participate more. I know you're here every day. Participate more if you can. I think it'll help. So, as I say every day, but I definitely mean it, and I've spent over 25 years with a nonprofit trying to help produce it, but peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Cheers.